Hey, what's going on, everybody? It is Wednesday, April 20th. All right, we had an up day in the Dow, S&P flat, Nasdaq was down. I guess the Netflix earnings yesterday put a scare into the whole growth stock paradigm, and so they're going to be taking a little bit of heat now in the near term probably. But Tesla, after the close, reported blowout earnings, sales surging 80% year over year. I mean, profits way up, and that was even with the pandemic. So Tesla's doing fantastic. Last I checked, the stock was up sharply from its closing level. So we'll see tomorrow. Very interesting oil report today, the weekly EIA Petroleum status report. Mostly, first of all, we had an 8 million barrel draw in crude, which was a shocker because there was also a 4.7 million disgorgement from the SPR, from the Strategic Petroleum Reserve. So even with that huge, outflow from the SPR into the marketplace, we still had an 8 million barrel draw in crude. We had a draw in gasoline, modest draw in gasoline. I think it was like 800,000 barrels, and we had I think it was a 2.7 million, if I'm not mistaken, or 2.4 million draw in distillate. Distillate inventories are really, really, really low. I mean, they are. I think we're at 108 million barrels. That's like way, way down. That is tight, really tight. But the thing that really struck me in this report today was exports. I mean, U.S. petroleum export. Before I get into exports, let me just mention one other thing, that U.S. domestic oil production rose by another 100,000 barrels a day to 11.9 million barrels a day. That is the highest level in 2 years. That goes back to May 2020. Now, we were like at around 13.2 million before the pandemic hit, like in February, March 2020, and then it plunged with the pandemic when everything got shut down. So we're still like over a million barrels, 1.3 million barrels away from the peak output that we saw before the pandemic. But, it is creeping back up there, and we're seeing regular increases on a weekly basis in rig counts. So the thing that really struck me, though, was the exports. I mean, exports are just blowing through the roof. So that explains the draw in crude. It also explains, persistently high prices because, I mean, we're exporting our product out to the foreign sector. So even with that higher U.S. domestic production, it just looks like more and more of that's going to be going to exports. And if Europe supposedly next week is going to impose a ban on Russian oil, so you better expect U.S. exports to go even higher. This is the thing that's astonishing. And there's a whole, currency, U.S. dollar element built into what's going on here, and I'm going to talk about that. But U.S. combined crude and refined petroleum product exports over 10 million barrels a day. 10 million barrels a day. Now that's not net. Net, we are exporting 2.9. Net, of course, is exports minus imports. The U.S. is now a net exporter of 2.9 million. It was 2.9 or 2.3? 2.309 million barrels a day. That is the highest. I think it's the highest in 2 years. I have to go back and check, but that is a very strong export number. And again, if you think about that, I mean, whatever we're producing here, a big chunk of that is just flowing out to the foreign sector. And this is another reason why, and I've been talking about this, why I think the whole inflation impact is going to be mitigated somewhat by the fact that the U.S. is a net exporter of petroleum. So that like I've been saying, that adds to final sales of domestic products. So that is a contributor. That is an addition to GDP, where we know that the trade deficit, the overall trade deficit, is a subtraction from GDP. In other words, net exports in the aggregate. U.S. runs big trade deficits, so that is a subtraction from GDP, but it is offset a little bit by this very, very strong petroleum exports. Now, here's where the currency element comes in. I have said many times, you know, when you talk about de-dollarization and stuff like that, it's not about other countries desiring simply desiring to hold reserves other than US dollars. You know, like if Russia sells its dollars to, I don't know, the European Union, you know, somebody externally is still holding dollars. It's just changing hands. The only way for the world, the rest of the world, to de-dollarize, to get rid of their dollars, is to exchange those dollars for goods or services produced in the United States. And now oil is becoming a major, major player in this paradigm shift. Okay? Follow me so far? Which means that we're going to start to see I think a rapidly shrinking U.S. trade deficit. This will underpin the dollar's strength. Okay, I think up until now, we've seen most of the dollar buying has been out of, you know, I guess safe haven buying. It's been on the whole narrative of the Fed going to raise interest rates and hawkish, you know, the whole hawkish monetary policy outlook, etc. Blah 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 blah. Sanctions, I guess, play into it. I don't know how they play into it really, other than from a psychological perspective. I never thought sanctions were bullish for the dollar. But, you know, that historically, I mean, if you go back to even when Trump was president and with the trade war with China, you know, that bolstered the dollar. I mean, that is a narrative out there. Actually, when you look at the dollar index over a very long time frame, like if you look at it over a 20-year or a 40-year time frame, the trade war was a tiny little couple of percentage, maybe 5 or 6% change in the dollar. I mean, it was minuscule. And even the rally that we've had in the dollar from the low point in January 2021 until now, you know, it looks big on a day-to-day when you're looking at it, or if you short the dollar. But in terms of the big picture, you know, it's a very small move. However, if I'm right about this, and you know, we're really starting to see now for the first time ever the process of de-dollarization, like real de-dollarization. I'm not just talking about one country eliminating its dollar reserves, but then another country is picking it up. I'm talking about, you know, countries literally giving their dollars back to the United States in exchange for product, in exchange for goods and services. That's a real paradigm shift. Okay? That's real. And I think it is happening in the oil sector. I mean, you could just see this trend of U.S. oil exports, petroleum exports, and not just oil and refined products, but natural gas too, LNG. It's big. I mean, this is a major, major thing that is just in its nascent stages right now. And it's going to play out. I mean, look, when Europe, I mean, if Europe bans Russian crude next week, I mean, this whole dollar paradigm thing, the dollar, bullish dollar, the shrinking in the U.S. trade deficit, because, I mean, this thing could really, really take off. And the dollar could be in a major, you know, kind of almost, I would call it a secular bull trend because of this. So it's very interesting what is going on. Very, very interesting what is going on. Now, mostly this will be, I guess, blamed or explained or rationalized by the Fed's monetary policy. You know, they're raising interest rates, so that's bullish for the currency. That's all bullshit. You know, MMT explains this. And, you know, you just see this clearly in real world examples. I mean, you know, low interest rates are bullish for currency. High interest rates, I mean, you look at Turkey, you look at Venezuela, you look at Argentina, you look at you know, all these countries that have jacked up their interest rates, and the currency just continues to fall. You know, so that is, you know, MMT just destroys that argument. And you might say, well, what about Japan? The yen has fallen. I talked about that yesterday. Japan is running. The problem with Japan and the yen is that it is running two large deficits. Number one, the fiscal deficit, and number two, the trade deficit. But actually, Japan's trade deficit is starting to narrow. So we might, you know, we might see some moderation in that decline in the yen. We might even see a pretty big correction in that move if we flip back. If that flips back, if Japan's trade balance flips back into a surplus, then I think we could see a pretty good rally in the yen. But right now, I'm speaking to the dollar, and this is it. I mean, this is the way, the only true way to de-dollarize for the world is to give those dollars back to the United States in exchange for goods and services. Like, you know, the United States is like the origin of the dollar. The dollar is a monopoly unit of the United States government. It goes back to the United States. It comes out of global circulation, you know, and, you know, not completely, of course, but that trend in the narrowing of the deficit, and I'm talking about the trade deficit, driven by rising petroleum exports and natural gas. That's a big thing. You don't hear anybody talking about that. And that is happening right now. 10 million, this is a record right now, combined oil and refined product exports, 10 million barrels a day. That is an all-time record. Again, that's not the net. Okay, the net is like 2.309 million barrels a day. Very, very strong. Crude oil was in the latest week 4.2 million barrels a day exports. It's not net. Again, it's not net, but that's a big number. That is a big number. And the U.S. is a net exporter overall. So that's what's going on. And I just find it really, really interesting. And this is clearly a manifestation now of the sanctions, of everybody, you know, shying away or not accepting Russian oil. It could go into hyperdrive next week or very soon if the EU, as they're threatening now to ban all Russian oil imports. So it's going to be very, very interesting to see what is happening. Other than that, you know, let's just mention today, I did mention today's decline in the Nasdaq. It's driven by, you know, the growth scare, let's put it that way, because of what happened with Netflix. You know, Netflix is one company. I don't think technology, the tech sector, that's Nasdaq, which Nasdaq largely represents, you know, I don't think that we're talking about an end to growth in that sector. I think actually Nasdaq and the tech sector, tech stocks could outperform over the next 12 to 18 months. I understand, you know, people still now are frightened by the monetary policy outlook, but you know my point, my position on that. I mean, I've been very clear on that. And again, I'll get back to something I said, you know, several times before. I'm looking forward to seeing what the market reaction is to monetary policy, because it just, for me, it's very hard to accept that when everybody is expecting the exact same outcome, like I don't see any, they're all saying the same thing. We're going to have a massive recession. This is the complete opposite of the Goldilocks scenario. This is, doom and gloom to the 10th power that is about to happen. There is nothing positive in this whatsoever. Fed quantitative tightening, 7, 8, 9, 10 rate increases, inflation at a 40-year high. I don't see. So when everybody is so aligned in the same way, I mean, I've been in this business a long time, and I would be shocked. I have never seen a situation like this ever before where, there is universal agreement that we are going into some massive, massive downturn and recession, and everybody agrees on that, and that is what's going to happen. I mean, I've never seen that happen before. That'll be, for me, it'll be like a once in a lifetime outcome. We'll see. But and I'm not just betting based on market psychology. Fiscal is strong, bank credit, Fed's balance sheet reduction leading to a reduction in reserve assets in the banking system, allowing for more loans, this sort of thing. I mean, I've been telling you all the reasons why I believe that the outlook is not as dire and gloomy as everybody is trying to make it out to be. Anyway, that's it for today, folks. If you want to get a copy of my MMT Trader, go to my website, pitbulleconomics.com. I'll put the link here in the description, and sign up for a 30-day free trial. All right, I put the individual price back down now because selling it separately to institutions, so you check it out. Bye.